You're listening to The Real Well Show with Kathy Fedke, the real estate investor's resource.
With the high cost of recent wildfires, storms, and flooding, insurance companies have been dropping customers in those high-risk areas. What can you do if you can't get covered, or if you are covered, how can you make sure you're going to get your payout when you need it? I'm Kathy Fedke, and welcome to The Real Well Show. Our guest today, Amy Bach, has been a professional insurance consumer advocate since 1985 and an attorney since 1989. She co-founded United Policyholders in 1991 and serves as the organization's executive director and primary spokesperson. And she's here with us today on The Real Well Show. Welcome back, Amy. Great to have you here.
It's a pleasure to be with you, Kathy. Thank you.
Insurance is a huge issue these days, both for real estate investors and homeowners in general. We know that it's getting harder and harder to get insurance and to get fully covered. So are you seeing any relief coming for homeowners or investors looking to be covered?
Well, we hear rumors, I had heard that one of the insurers was getting ready to jump back in, and but they didn't want to make a formal announcement because there's been so little new options that they were afraid they would get slammed with applications. I've gotten a few solicitations from an Allstate agent in LA who told me that he was going to break off and represent a new sort of an Allstate subsidiary. But I haven't seen anything concrete come across my desk. So the news is still coming in bad. Just this week, Kemper, announced that they were pulling out, and that it's a couple of small companies, but still. So not yet. No, not yet. So really where we are is just helping people deal with the way things are right now.
Okay, so is it across the board, across the nation, that it's hard to get insurance, or just in certain areas like fire-prone California or Florida with the hurricanes?
So the areas that are struggling the most are the wildland urban interface areas in California and suburban areas in California, practically all the coastal areas in Florida, coastal areas in Louisiana, mountain areas in Colorado where there have been wildfires. But we are hearing from people in lots of other states, Minnesota, New York, Oregon, that there are fewer options and that prices are higher. I think prices, home insurance and business insurance premiums are up across the board, all across the country.
And as long as we continue to see storms, that's probably not going to subside.
I think that it's just as much tied to inflation and to technology as it is to climate change and severe weather events.
Oh, what do you mean by that? I mean, obviously inflation, prices going up, but
right.
Are there costs going up, or the cost to rebuild is going up? And
it's the costs of repairing damaged cars, repairing damaged homes, repairing damaged buildings, material costs, labor costs are all up and have been since, COVID supply chain interruption started to be a thing. And I think, we haven't really quite been able to, I mean, we've got some movement in the financial markets that's positive. But then technology. Back in sort of for since insurance was a thing, insurers have relied on a lot of sort of basic tools, an application that the consumer fills out, and their credit score and historical information about their property and that sort of thing. And that's a lot of how insurance companies decided who they would sell to and who they wouldn't. And then, of course, their actuaries decide how much they should price it at. But then we started getting drone imagery and AI and predictive algorithms for risk. And insurers started to rely less on the human evaluation of other humans of, somebody walks in the door to your insurance agency and you evaluate whether or not, they're a good risk. Like that's completely out the door now. And it's very much more mechanical, right? So what is this applicant's risk score? And then when you apply this algorithm, what does it tell you about the likelihood that they would file a claim? And then the drone imagery. Oh my God, look at their wood pile next to their propane tank, right? So all those things combined have made insurers see risk in a different way than they had, and they don't like what they see.
So an insurance company can just drop people.
Well, that's the way it is with, the only rules here in California are they have to give you 75 days notice if they're not going to offer you a renewal policy. So people say, I've been with this company for 50 years. I never made a claim and now they're dropping me. I don't understand. That's their right, as long as they give you the notice and they're not discriminating against you on the basis of your skin color or, ethnicity, right? As long as it's in keeping with their own internal guidelines, it's at their option. And, my organization went into the legislature some years back to try to change that, to make it a little harder for insurers to drop customers. And the pushback we got was so intense that that's kind of, it really was eye-opening for me, right? That there's not a lot of will in there's not a lot of will in Sacramento. In fact, now there's even less will to try to make insurers do things they don't want to do than there ever has been, because there's a fear, right? A lot of the lawmakers are afraid. They don't want to make a bad situation worse. And so things stand right now, insurers are pretty much free to pick and choose, who they want to insure and don't want to insure.
So how does the public sector offer insurance? I don't think it actually is the public sector, but let's take the California Fair Plan. How does that work? Are they still working with the private insurance companies, or is it publicly funded?
No, it's all private insurance companies. So we don't have a taxpayer funded or a taxpayer funded insurer of last resort. We have an insurer funded insurer of last resort. So the California Fair Plan, which is very, very important, more than ever today, is made up of, it's actually an association. It's not an insurance company. It's an association made up of insurance companies. And to correct myself earlier, there is actually some law in California that forces insurance companies to take risks they otherwise would not want. And that's the Fair Plan. That is, if you want to do business in this state and you're admitted, which is a fully regulated, licensed type of insurance company, you have to participate in the Fair Plan. So you have to contribute your resources to the Fair Plan in proportion to your market share in the voluntary market. So for if you're State Farm and you have a fifth of the market, which is what they have, right? They insure out of every 5 homes in California. They also have a 20% responsibility with regard to the Fair Plan's liability. So we have this situation where it is important that we try to keep insurance companies happy here. They've been saying they're not happy, but we do have to be building a public alternative because I don't see, as I say, I don't see the genie going back in the bottle. Like once insurance companies have started using these tools, predictive analytics, algorithms, drone imagery, and scores, they're not going to stop. And those indices are always going to make us, California property owners, look risky. And so I think, we have to be prepared to come up with an alternative so that people can have a safety net. And it doesn't necessarily have to be a government program. It has to be government sponsored because, the way things are looking right now is the private insurers are saying, we just don't like the bet as much as we used to. So,
And does Florida also have a similar type plan?
oh my gosh, Florida has a different plan.
Okay.
Florida, the Republicans have a supermajority in Florida. And there's it feels like when you watch, what the legislature has been doing and what the insurance regulator has been doing is they're diehard believers in free market competition. And, and I think there's this conviction that they do have a state-run program, but I think there's this conviction that government should never be the solution, right? It should always be private industry. So they're, so they're basically looking the other way and letting some really questionable insurance companies do business in that state because of this philosophy that, that government should never try to
Not too many regulations, yeah. So when you say questionable, does that mean they're not going to pay out, or what does that mean?
That means that
you're paying for nothing.
that means that they're, the quality of their products are not what they should be, and the quality of their claim handling is not what it should be. But more importantly, their financial capacity, their solvency, and that they. A number of these companies, they look at it as an opportunity to collect premium, but it's not just about that, right? I mean, it's
got to get something for your money.
Exactly.
Yeah. Okay. So with that, we have a lot of listeners who do own property in Florida. We also do. What should we be looking for in those policies to hopefully pick the best company?
Well, there's a new rating agency in Florida called Weiss Rating Agency, and one of the issues is that Demotech was a rating agency. A lot of people feel like Demotech was kind of giving an A rating to companies that did not deserve it. So I would say if I own property in Florida, first I would find an agent that's very much on top of things. Find an agent that's up to speed on what's happening, and may have some good options for you. And then, if the options that you have for insuring your property are with a new company, a startup, you definitely want to look at their ratings with the Weiss company, and you want to do a little extra homework into their financial strength. That's and their claims paying record. And
you would find that there at what?
Well, you have to look online. You got to do your research.
What do you do? What do you look for? You just look for rating.
Look at customer reviews.
Reviews.
Look at Yelp. Look at customer reviews. Better Business Bureau. See, because I think. Sad to say, the government agencies, the state agencies, I'd love to be able to say, oh, well, look at the complaint ratios with the Department of Insurance for those companies and see, do they have a good reputation? But I don't think that those indicators are going to be accurate or up to date. So I'd say, your good old fashioned internet research, but also people are carrying very high deductibles, which is kind of, that's what you have to do these days. But then, ideally have a rainy day fund that you've got to cover the amount of your deductible. And then just know that finding that savvy agent now is the most important thing, because there are options, but a lot of the options are not advertising retail. They're going through the channels of agents with whom they have a good relationship with, insurance agents, brokers that the insurers feel are going to bring them good customers who are prudent and who are less likely to suffer losses. I mean, not that being prudent has anything to do with a hurricane, damaging your house, but also if you have property in Florida, you got to be investing in mitigation. You've got to have roof tie downs, as at a very minimum, and hurricane shutters, and you've got to take some steps to prevent your home from being damaged in a high wind or water event.
Because the insurance companies would also be looking at that to see if you protected yourself.
Well, that will definitely help you qualify for preferred pricing, but it'll also mean that your home is less likely to be damaged, and there'll be less reason for you to file a claim. And that's the main reason.
I mean, that's one of the things I've been saying lately is we bought a new duplex in Florida, brand new, and the insurance is actually really low. So I'm assuming that's because it was really built to modern hurricane standards.
That's great. That's great. And see, I know I'm sometimes a little bit of the prophet of doom and gloom, just because people don't get in touch with United Policyholders to say, oh, everything's going great. They get in touch with us to say something is not going well, right? And we read all the media coverage of what's going on in Florida, and we hear all these stories of really high premiums. So I'm thrilled to hear that you were able to get a good price for your investment, for insuring your investment.
So what should you do in general? What should you be looking for in your policy to make sure that you will be covered?
Well, the first thing is to see how much your dwelling itself, the structure, is insured for. So, what we often tell people to do is you take the square footage of the home, living space, and then you divide the policy limit for the structure by that to see how much per square foot of living space your insurance policy would generate to pay for repairs or replacement. So is it 200 a square foot? Is it 300? Is it 400? And then try to get a sense of what construction costs per square foot are in that area. Again, internet research, talking to a builder in that area. Most parts of the country, it's going to be somewhere between $250 and $500 a square foot, just depending on where you are. Right? It used to be closer to $180, but over the years, it's crept up above $200 a square foot for sure. In almost everywhere you go. I mean, tract homes in Iowa is another story, right? So focus on making sure your dwelling is properly insured. Then find out what the internal limits might be. And by that, I mean, is there a cap on what the policy will cover for mold damage? Is there a cap on what the policy will cover for water? Those are some of the common places where insurers have really tightened up what's covered and how much. And then what's the deductible? And in Florida, you could have up to 3 separate deductibles. So you could have a deductible for that would apply to a fire or theft. Then you could have another one that would apply to wind. And then you could have a third that would apply to your roof. So knowing what the deductible is helpful. Knowing what there may be caps. And then the third part is tailoring it to your assets. So, for example, let's say you have really great art, a really nice art collection. Most standard property policies will say the most it pays is $2,500 total for art, unless you schedule, right? You get a rider, you list the pieces and with some appraised value, and then you pay extra for that. Same thing goes with business and equipment. These days, a lot of people working out of their home, they've got their computers, their printers. Most policies, again, standard, are going to say the most we pay for business equipment in a home is $2,500 or something like that. Same thing, or $1,000. So, if you've got special stuff, or you've got extensive business equipment, those are some of the things that you want to make sure that you've customized your policy to cover.
And you want to make sure, especially if you're in Texas or Florida or anywhere coastal, that you include named storms.
Right.
Because we had one group. We haven't had too many issues with insurance or really any damages, but we had one couple call after the big hurricane in Texas and in Houston, but they didn't get covered for the named storm, and they had the flooding and didn't get any payout for that. So that's important too.
Yeah. Yeah. I mean, you brought up a very good point. If there's any chance that your property could flood from a storm surge or from a really heavy rainfall, then you want to look into getting a quote to get flood insurance or a rider on your policy, because again, those are flood insurance standard home policies have excluded flood damage since the 60s. So you got to buy that separate if you want that.
So I had you on after the Malibu fires because we were right in the middle of all of that, although our home was fine, shockingly. But a lot of people in Malibu still haven't been able to rebuild, mostly older couples who just didn't really understand, like you said, the cost to rebuild, and weren't adequately covered. We are, of course, seeing that with the Maui fires. What's the update there? And I think the last I heard, some people weren't insured at all.
Yeah. So, United Policyholders is on Maui working. We sent teams of folks we have a lot of volunteers who been there, done that, lost a home in a wildfire in California or Colorado. And we were able to fly them out there for the first couple of months. And yeah, some of the statistics are pretty sad about, I think 40%. Homes are not insured at all.
Oh, terrible. Wow. Right.
And so that's a biggie. And that's, then you have FEMA there. But it's really tough because, the max grant you can get from FEMA is something like, 42,000, which means, that that's not going to put.
You're not rebuilding in Hawaii for
right.
For
so I think there's going to be there's certainly, the good news, there's a lot of heart and soul going to help people. There's a lot of philanthropic resources. Oprah's over there, and there's quite a few like big tech guys that live there. And I think there's just a tremendous amount of grassroots support for the community and the impacted households. So I have some optimism for the recovery, but I think it's going to take a while, and I think we'll be seeing some innovation with resilient tiny homes, kind of thing, where we'll be seeing some innovative design concepts, very cost effective, not traditional, wood frame construction. I think we'll be seeing probably some pretty modern looking places go up there. Just because that's going to be the only option for a lot of the impacted households.
What are some things you're seeing that people also didn't get covered for, or if they did have insurance, they didn't have the right policy?
I mean, for the temporary rent, for example, you get your bucket for your home, your bucket of benefits for rebuilding, and then you have your bucket for debris removal, which I'm not as worried about. I think there's a coordinated program the county is doing that I think will be affordable for people. So what we worry about people not having enough to rebuild, but then we worry about them running out of the temporary rent benefits that covers their living expenses while they've lost the use of their home. And here in California, before we started seeing the mega fires, it was common for people just to have 12 months of that benefit, right? You have the insurance company will cover your rent for a year. And I guess a lot of people were able to move back in after a year, although I haven't seen much of that. Then we had to fight to stretch that and say, okay, no, insurance policies in California have to provide at least 2 years, and then it became 3. So we actually have a law in California that says that your insurance has to cover your temporary rent for up to 3 years after a wildfire. Well, they don't have that law in Hawaii. And so a lot of people there come next August are going to be, not getting any additional help from their insurance to pay for their rent. So that's going to be that'll be a fight. But the commissioner over there has already put out a directive saying to insurance companies, given the sadness and the magnitude of the loss, I'm calling upon you as good businesses to extend people's temporary rent benefits past the 1 year all the way to 3 years. So he's asked for that. That doesn't mean insurers are obligated, but he has asked them to do that.
Well, let's hope they do the right thing. All right, Amy, it's always a pleasure to have you here on The Real Wealth Show. Very, very enlightening. Thank you.
Thanks so much, Kathy.
And thank you for joining me here on The Real Wealth Show. If you'd like to get a referral in your area for a good insurance agent, you can just go to our website at realwealth.com. Click on the Invest tab after you join. It's free. And you'll see a drop down of different markets around the country where we have really great teams who have been working with insurance companies there for years. Again, that's realwealth.com. Thanks again for joining me here on The Real Wealth Show, and we'll see you next time.
The views and opinions expressed in this podcast are provided for informational purposes only and should not be construed as an offer to buy or sell any securities or to make or consider any investment or course of action. For more information, go to realwealthshow.com.